move on and let's now address another piece of earnings, Kaynes Technology. And we've got Ramesh Kunikanan, the Executive VC at Kaynes, joining in on the show right now. Ramesh, hi, morning. Great to have you today on ET Now. Ramesh, let me just, spell it as is. You've refrained from actually giving out a guidance this time. How is it that, your investors and shareholders should read into this? Is it a very cautious approach? And is it a conscious decision to not give out a guidance?
No, we did not give a guidance. We have clearly told, we will exceed what we have done last year. So it is what we are trying to tell is we are not going to fix a number like last time. So we are very clear. We will overgrow what we have done last year, both on the EBITDA as well as on the top line.
What does it translate into when you say that you're going to exceed last year's top line and EBITDA numbers? What is the kind of growth that you're looking at your business operations, and what will drive that growth?
We are looking at around 20-25% growth, and that will be consistent. We are able to clearly see a 3 years roadmap for that. So there is no problem on guiding a number of around 20-25%.
When it comes to EBITDA, is it going to be maintained at the current level, or there could be some pressure coming in from because of the West Asia and other geopolitical issues as well?
See, the number what we are now giving as guidance is no issue irrespective of these small happenings in and around. So that should not be a problem. We are able to see clearly markets are from which sectors and things like that.
So what is the
last
guidance?
Quarter was not a good quarter for all of us because of the export impact, duty imposed by US and things like that. But those things are more or less now settled, and I'm sure and certain these numbers, what we are giving as guidance, will not be a problem.
The one thing, Mr. Kunikanan, that I wanted to talk about was also, 2 government contracts actually slipped for you, right? To Q1 FY27, and a major EV two-wheeler customer dropped volumes by a good 90% for you. Were there no early signs that were already given? Did you not foresee this coming in? And what does this say about, say, concentration risk when it comes to your customer base?
Actually, we were very confident of getting this material, but unfortunately, one material did not come. The other one, we had inspection missed. So that is how this has happened. But I'm sure and certain there is no order cancellation. There is a referring, it will be done in this quarter.
Mr. Kunikanan, if you can give us a sense of the kind of exact disruption with respect to supply chain for you, and how much time will it take to restore that? Because you're saying that some products or some components didn't come in, and that's what's one of the issues. So what is your outlook on the entire normalization of supply chain?
For our regular products, we are able to get material somehow. We are pushing and getting for new projects and things like that, where memory sometimes has crossed its price. Many items, lead times are going up, but we are taking a conscious decision to order in ahead and then come out of these problems.
So, Ramesh, your order book is intact at about 83.7 billion rupees, right? With a book-to-bill of 1.7x. But orders being deferred rather than cancelled still hurt your execution. What gives you confidence that these don't defer again, as it has happened in the previous quarter?
We normally do a study what went wrong and how to correct it. So we've taken adequate measures to make sure that these same repeated problems don't happen. So that is how we work. I'm sure Muthu and myself is working very closely to come out of these issues and then do a good year this year. We are very confident of it.
what is concerning for the street is that you have smart meter order which is for next 2 to 3 months, but once that is over, there's nothing to replace it. And over and above that, you've already reduced the guidance for OSAT, from nearly 1,000 crores to 250 to 300 crores. What is the reason for this change in guidance for OSAT, and what will replace the order book of smart meters?
OSAT is a small confusion which is created by my team, and then market is also got a little confused. But it's a new product to us. We need approval, we need customer approval. So it is all taking its own time. So that being the situation, we have given a very conservative approach for OSAT for us to build it up to 1,000 crores in the next 3 years.
Quite interesting. The other thing I also wanted to talk about, since you're talking about your OSAT guidance also, is what will fill the gap? Do you have specific orders in the pipeline that you can tell us about? What will bridge the gap for you?
No, see, this is not a gap at all for us because we have originally itself planned like this. But while telling, my team has confused and told it in the first year, and market also has understood. If you look at it, our plan originally was around 350. We have now put it little more conservative because some machines have got delayed because of the flight availability and things like that. So we have taken a 250 crores for the first year, and overall next 3 years we'll take our OSAT company 2,000 crores.
What about smart metering? Because those orders of about 3.5 million meters are expected to be executed in 2 to 3 months with no extensions coming in. What is going to replace
it is
that
not
revenue
3.5
once the
million.
current order book runs out?
See, we have orders for meters as such with other AMISP companies. So we as a company are more interested to give meters as a supply. So we have pending orders of that also. For that next full year, there is enough meter order with us.
Okay, Mr. Kunikanan, if you can also give us a understanding of the operating cash flow situation at this point in time. It's negative as we speak. When do you expect that to turn positive?
If you look at our EMS standalone company is positive and it has generated 265 crores. We are working very closely with our entire team to bring it down overall. So we are looking at a 3/4, first, second, and third, to make it into positive. And so this year we are very confident we'll bring it positive.
Some more questions on that. And I want to get back to metering because that is a good 25% of your revenues, but 65% of your total receivables. Now, receivables in that subsidiary alone jumped from about 5.25 billion rupees to about 1,365 crore rupees through FY26. Mr. Kunikanan, at what point does the metering business specifically become a structural drag rather than a timing issue for you? If you can just explicitly answer this.
See, we are working very closely. We had some delays in the market to install, so that is why major collections have not come. But we have put adequate measures. We have taken an approach to subcontract it and things like that. So we will be back to normal in 2 quarters, and collection also we should be able to complete in 3 quarters. That is our plan.
There have been government payment delays as well, which have compounded the receivables build up for you. Is this a risk you adequately priced in when you acquired Iskraemeco? And how is it that you're managing it going forward?
As of now, for this next year, fully, there is no issues on cash flows. Our math says there is no problem. But if you ask me, while acquiring, did you question in this? We had not fully done it. That is a mistake, and then we are taking correction on that and corrective action on that. We will definitely come out of this in the next 2 quarters.
Railways also, Mr. Kunnikanan, that's a high conviction call with Kavach trial orders in already and large orders that you're expecting in the second half of the fiscal. Having said that, full approvals are only anticipated in first half. What is the downside scenario if approvals get delayed?
See, we have not calculated Kavach in our current plan. Kavach, whatever we get will be an upside, but we have planned, because Kavach type of orders, even if we get it, it will take a long time for us to implement. So we have not factored in our business plan for this year. We have only factored whatever trial order we have got. Our idea is to make sure Kavach is done in good spirit and meets all the requirements
Also,
in this year.
Okay. This 320 million rupees in additional quarterly amortization from Iskrameco as well as August Electronics acquisitions is a recurring PAT drag for you, sir. And you know that the market appears to have underappreciated. How should analysts factor this into their models going forward? If you can explain that.
See, when we had capitalized this, we had actually done an annualized amortization. So what we have done today is we have quarterly once annual quarter only we have amortized it. So here going forward we will do quarter on quarter, so that this impact will not be seen as what it is seen today. And we have factored in our business plan these amortization.
Mr. Kunnikanan, you spoke about the fact that you're looking at 20 to 25% top line growth coming in FY27 for you. What is the driving segment for this 20 to 25% growth? Because you have brought down your guidance for OSAT. You are saying that Kavach will be a slow progression which will happen. So which are the segments which are going to drive this 20 to 25% top line growth for you?
If you look at all our new products, what we have developed in the last 1.5 years, all are getting fructified in this year. So comfortably for us to do 20-25% should not be a problem. We have revisited this whole thing and then we are very confident to do that. If you see our conventional EMS itself is having a growth much more than that.
I know, but is there a particular segments which will make sure that you grow at 20 to 25%, and what is the risk associated with this 20 to 25%?
If you see our aerospace, if you see our industrial and automobile, which is growing much more than what we have now committed here. So on an average, we are able to get 20-25%. That is how it is.
Okay. Okay, Mr. Kunnikanan, lastly, any message for your shareholders right now after the earnings?
In my opinion, we are expected to do very well. And so far from 700 crores we have reached here, you will see the similar growth in the days to come in. That is what the message I wanted to give.
Okay, Mr. Kunnikanan, it seems the market has well taken your message as well. Stock holding up right now as we speak. Thank you so much.